Hello and welcome to the Interprise Suite Accounting module demo. Okay, as we can see we've got a workflow menu here, so if I wanted to do a new journal I could just click on the workflow if I wanted to, or new prepayment, or find a nominal code. Obviously we've got the left hand menu which is new, so new account code, new journal, find an account code, and in my tools section I've got things like the VAT and valuations and all that kind of stuff. So I guess we'll just start from the top of the menu and work our way down. Okay, so account code. If I wanted to create a new account code, I've got numerous options. Just simply, if I just say user defined set of accounts, it comes with a template. And so if I just go next, simple account structure. Okay, and I just type in something like 4,400. I'll call it sales type X. Right, is it an asset, liability, an equity, a revenue, or an expense? It's obviously a revenue type item. We've also got subgroups, which is purely for your reporting, and you can obviously stick them, wherever you want. Is it a bank account? So we have to define whether a nominal code is a bank account or not, because obviously that links it to a cash book account in banking. I can add another one, as many as I like. And obviously when I go next, it says, do you want to put a budget against this? Okay, I'll put a budget of £100,000 against it. And that's about it. So I say next, and say finish. And then if I look at my account code list, you'll see somewhere along here, 4,400, there you go, sales type X. Yeah, okay. So you can see the structure here. Yeah, it's very similar to sort of Sage 50. Yeah, because obviously a lot of us have come from that background, and I'm sure obviously a lot of people upgrade from that product to Enterprise. So it's a simple structure. Everything begins as zero as an asset, one a current asset, two a current liability, three financed by. Everything begins with four is sales, five purchases, six direct expenses, seven overhead. Yeah, so you get the idea. Very sort of simple structure. But obviously we can allow for a 15-digit alphanumeric nominal code. On top of that we have what's called segments. So if I go into here, you can see that I can specify up to 5 segments of 5 characters long. So that's quite obviously that's quite a lot. You can see what I've done here is I've done country, location, department. Yeah, and in here I've said these are my countries, like France, Philippines, United Kingdom, United States. I've said these are my locations. Yeah, these are my departments. And obviously the next thing it does is it says what's valid. Okay, so for France's point of view, obviously only Paris is valid. For the Philippines, only Makati City is valid. So when I create some more nominals in a minute, you'll see that it'll only create the options that can really exist, because obviously France, Los Angeles isn't really a combination that you could obviously do. And obviously in here you've got LA, well we've got sales and support LA. In London obviously everything, that kind of stuff. So you get the idea. So let's just kind of do a new account code, and this time rather than just picking a simple one, we do a segmented one, and I say don't apply this don't apply this to balance sheet codes, only apply it to profit and loss codes. Okay, so sorry, hang on for a sec, I should have picked the standard template to do it on. And yes, okay, and then it goes through my countries and locations and departments, just confirming what I've already entered before, and then based on that it will actually produce a new nominal list. Okay, so what we can see here is if I open it out a bit more, you better see it's created a possible, for like 6,000 for example, it's gone France, Paris, support, and for Philippines it's gone Philippines, Makati City, production department. In the UK you've got London, which is admin, UK London production, UK London sales. So you can see it's only done the options that we ticked as potential options, and it's done that for every nominal code. Yeah, so obviously you can tick the ones that you want. Yeah, or you can just say select all up here. Yeah, and that'll tick them all. And then you just untick the ones that you don't want. Um, so I'm not going to say keep that, because obviously that's just a massive nominal structure. But obviously it would cope with that. Okay, so let's just go and look at a new journal. Okay, so if you're into journals, this is great. You've got a reference, so I'll type in, I don't know, reference 3, and a second reference as well. You'll see that I've put today's date on it, and that's made that the actual period is December. Yeah, if I kind of made this November, yeah, it would put a November period on it. And if I put this as, let's say, October, yeah, you can see that what it says, it's left it as a November period. So at the moment I'm in November from a nominal point of view, and what that means is that yes, I can date transactions October or July or whatever I want to do, but since October is now closed, yeah, then all I can do is, when I do a journal like this, it'll want to post it. It'll want to stamp it as a November period transaction. We do have options which I'll come to later, which are prior adjustments and closed period journals, if you want to do that. But the whole point about closing a period off, you don't have to close a period off now. You can close it off in 6 months' time, but once you close it off and you've done your accruals, prepayments, reports, all this kind of stuff, what you're doing is you say, I'm drawing a line. I'm drawing a line in the sand, yeah, and so otherwise, what's the point in doing all those accruals and prepayments? Okay, so you pick your account codes. Yeah, obviously ignore what I'm picking, but you pick any codes. You put your debit in, you put your credit in, and you can type your descriptions if you want to, what it's all about. Is it taxable? We allow taxable journals, which will affect the VAT return. Yeah, so you just pick your tax type, yeah, and obviously pick your tax code, and obviously you can say save. If this was, let's say, a month-end journal, you can save it, and then what you can do is immediately you could save, change date, and make a reversal. So for next month, yeah, obviously I just reverse it round and then say save and close. So as I roll into the next period, it automatically zero whatever I've just done. Okay, there is another thing on here called journal templates. Yeah, so if you do regular types of journal, yeah, then you might want to, I'm going to do something based on percentage, yeah, and I'll just call it Tony so I can see which one it is. You pick on your codes. Okay, let's pick on some profit and loss codes. 1, 2, 3, I'll just pick on those. Alright, so I'll say 100% goes to that one, and 20% goes to that one, 30% goes to that one, and 50% goes to that one. Okay, and I can type in some descriptions here as well. So what I'm doing is, this is a regular journal I do. Yeah, let's say it's for the electric or something like that, and I split it between multiple departments. Yeah, so the whole bill's gone on to electric. Yeah, and here what I can do is I can take it off electric and split it between by a percentage different codes. Of course, when you're entering the bill, you could split it by multiple nominal codes as well. But if I just do a journal now, so I just come out, get rid of that one, do a new journal, and then pick a journal template this time. Yeah, if I type in my £1,000 there, it'll automatically by a percentage go and do the others. Yeah, so it just makes it kind of quick and easy for me. Obviously that could be by value as well, or you could just have the code set up there. So if you want to do your prepayments and accruals this way, have a list of all the codes in there and you just type in the values. Yeah. Okay, we also have our own kind of prepayment accrual wizard. This is designed for people who don't really do a lot of journals. It kind of makes it kind of simpler. Yeah, so for example, let's imagine that we've paid the rent on the building, yeah, up front for 12 months, or we've had the bill for 12 months. Might pay it over 12 months, but we've had the bill 12 months. It's £12,000. Yeah, over 12 months. There you go. It's for the rent. And I'll put the rent nominal code in here, rent expense. Okay, so I would imagine I've already got the bill. I've put it on, yeah, to the landlord's account. I've put it to the rent nominal code. but if I look at my profit and loss, what it will say is this month £12,000. So obviously, it might seriously affect my profit. So what this does is this will take that £12,000 off the rent profit and loss code. It'll put it onto accruals, prepayments on the balance sheet. Yeah, and then what it's going to do now is it's going to say what periods do you want it to go over. But what it's going to do is it's going to take off the £12,000, put the £12,000 into prepayments, take it off the rent expense, yeah, and now it's going to drop £1,000 onto rent expense and take £1,000 off the prepayment nominal code. And then the next month you can see it's going to do the same. It's going to reduce that prepayment down by £1,000 and put £1,000 as a debit to the rent expense, and it's done that obviously for going forward. So now I don't have to worry about that. Yeah, so it's in there, all the journals are in there, and as I roll into each period, yeah, it'll automatically put it in for me. Same with accruals. Accruals just the opposite way around. For example, BT bill, it's coming in. Let's say it's £3,000. It's over 3 months. I'll call it telephone or whatever. This is where I obviously pick the telephone nominal code. So you've not put the bill on yet, obviously, because it doesn't come in for 3 months. Yeah, so what we're doing is we're accruing. Yeah, so we're going to put £1,000 as an accrual to the profit and loss, electric bill or whatever, or telephone bill. Yeah, so £1,000 debit goes against it. £1,000 goes into accruals on the balance sheet. Yeah, again, £1,000 next month, and then what it does is it basically reverses itself. Okay, so expecting you to put the bill on, yeah, in that particular month. So yes, £1,000, £1,000, there's another £1,000, but then what it also does is it takes the £3,000 off in total. Yeah, expecting you at that point to put in the bill for somewhere near £1,000. Okay, so finish on that. Okay. Okay, bad debt provision. Okay, so let's say at month end, you want to kind of look at only overdue invoices, or just a particular customer range or whatever. Usually you do it for overdue invoices, everything over 90 days or 120 days. Yeah, list it all. And you'd say select all. Yeah, and do an accrual. Yeah, so it's what you do is provisioning for bad debt. Okay, so if you don't want to do them all, yeah, you can actually pick them individually. Yeah, and say, I think that might be a bad debt, that might be a bad debt, that might be a bad debt. And then what it's going to do is it's going to do a summary of that. Yeah, and it's obviously doing bad debt provision on the balance sheet. Yeah, and it's putting into the profit and loss an allowance of bad debt. And at some point you come back, you look at your open bad debt provisions, yeah, and you kind of reverse them. Yeah, so now it's off. If you did another one, then obviously those transactions that were already provisioned, you wouldn't be able to provision again. They wouldn't appear in the list. Write-off. This is obviously pretty good. Let's say you've got lots of things that are less a penny, or if you've got lots of pennies or 2p's outstanding on your customer ledger, then this is a great way to kind of say, right, less than, yeah, and say 5p or something. I'm going to say 20 quid just so something comes up. Yeah, or I could say everything over 5 months old, yeah, just list. Yeah, and what you'd usually do is you can just basically select all like I did before, yeah, and obviously write them all off. So you can see everything here is below £20. You pick the ones you want, yeah, and if you say next, yeah, it tells you which invoices it's going to write off. Yeah, well, it's going to actually put. This is actually going to post transactions, whereas provision is just provisioning for bad debt, not doing anything to the transactions on the customer accounts. This is actually going to write them off and post transactions, write off transactions to those customer accounts for those amounts. Okay, so it's going to do that. So let's just look for one. That last one we did. We can see that there you go, Funhouse. Yeah, that's the actual transaction I did. Okay, and it does them individually, so you know that what against what invoice it was actually for. Okay, all right. Next thing, VAT returns. Okay, so on the tax and VAT side in the UK, we've got a couple of things, well, a few things. We've got an EC sales list, an Intrastat, and obviously a VAT return. I'll start with the VAT return because everyone does that usually. For all the VAT returns, we save them. Okay, so when you reconcile them, we save. So you don't you can print them off if you want to, or basically you can come here and you will always be able to look at your VAT returns and open them up and reprint them if you want to. I'll just say new. Okay, so you pick your date range. If you're VAT cash accounting, then obviously you can tick that box. It'll work on VAT cash accounting. I'll just produce a VAT return. What it's saying here is that for the range that I put in there, the date range, there are transactions dated before that period that have not been included in the VAT return. And obviously you're going to say yes, because that tends to suggest you might have had some late bills or whatever, and that weren't captured in the other VAT return. So I'll say yes. Here's my 9 boxes. I can see for sales I've got 8,566 VAT. So if I double click on that, I can see where it came from. I can see it all came almost for the standard rate. And obviously here's all the transactions that are actually here's all the transactions that are actually they'll make up those balances if you wanted to see them. Probably less important. The high volume of transactions, you're not really going to look in here. You probably print it off and have a look, or actually go to the nominal or whatever. When I want to reconcile it, I click that button. It reconciles it, then it puts it in the list. If I want to print it off, I can print it off, and it prints the summary. The summary behind each box. If you look here, this is the way you decide what actual codes go into each box. If you want to make up any more, you could very easily. Okay, so that's a VAT return. EC sales list. Okay, so if you trade with Europe, I'd imagine that you have done an EC sales list before. So you have some defaults in here, the standard sort of stuff that needs to go on the actual form. I'll say produce an EC sales list. Okay, again it's saying, do you want to include things before this period? I'm going to say yes, because that's the period I'm looking at. Okay, I've only got one customer we've actually dealt with in Europe. And there's all the invoices, so I can see it's £979. I can reconcile this, so then obviously these transactions won't be included in another EC sales list. I can create a file which I can upload if I want to. So I'll just come down here. It puts obviously in the correct format. So obviously they've only got one line here, which is for the French customer. But I can print it. So you can see, for each customer, it would give you the VAT registration number, so you can transpose that to your written format, your written document that you can send off if you want to, or you can use that to to file and then file it online manually if you want to. Okay, Intrastat. Okay, Intrastat. If you have to do it, I think it's if you do over 250 grand's worth of turnover to you're buying or selling to Europe, then you have to do an Intrastat. An Intrastat is a serious pain. Now, this system deals with it very, very well. If you do a sales invoice, then obviously that's a sales on the Intrastat. If you do a goods received in, that's on the on the Intrastat as well. Some systems seem to do it on PO or SO, and really it's movement of goods. So this does it on actual movement of goods, not just kind of raising a purchase order. Right. So in each module, let's say in the customer module for example, we have a confirm Intrastat analysis, same in the supplier module as well, and in here it lists all those invoices that satisfy the criteria to be a trading with Europe, and in here I can go into the detail. It automatically defaults in things from the stock code, so if there's a commodity code against a stock item, it'll appear in. It automatically defaults as to the types of delivery or whatever. The supplemental unit information is there. See, the weight's come in for that one. And it's obviously gone whatever the quantity is times the weight to give us our total weight. And here I can kind of make up for the fact I haven't got some of this information. If I wanted to kind of go across all items and say, that's the delivery method, and that's the it goes across all the items for me having to kind of save me having to edit them individually. So that's it. So when I say confirm, that'll now go through to accounting. And same on the supplier side, exactly the same routine. You just tick them, or you can finish off the details. As you want to. So I'll confirm those, say OK, so those will go through now as well. So if I look at Intrastat reconciliation and go new, Alright, so is it arrival, yeah, or is it dispatch? Okay, so arrival is stuff coming into us, goods received in. I'm going to say produce the intrastat. Yeah, there's obviously transactions date before that period. And each one of these are GRNs. Okay, so if I look at that one, at the detail of that one, I can see, oh yeah, okay, I can still change this information now if I want to. Brilliant, okay, right, I'll create the file. Okay, and this is the file that basically you upload, yeah, to the HMRC's website. It should have the commodity codes, the value, the weight, all that kind of stuff, exactly in the right format. And the same goes for dispatch. Yeah, so I produced the one for dispatch. This is obviously the invoice side. Yeah, so as I pick on one of these, pick on that one, let's say, I can see the detail behind it. Yeah, but and then create the file for that one as well. Obviously, when you reconcile it, it reconciles those transactions as been in a intrastat return. Yeah, so it won't actually include them again. Okay, so that makes intrastat very, very easy. We've got some big customers that use that, so it works very, very well. Okay, so journal template we've already been through. Multi-currency revaluation. Okay, this allows you to have a look at your potential loss or gains, or you can actually post loss and gains from here. Potential ones. I can see that I've done a couple already, but let's do a new one. Okay, so I'll say get transactions as of today's date. Okay, let's just expand this a little bit so we can see a bit more of it. Okay, so I can see that I've got in euros, I've got a French customer. These are all the invoices or credits or receipts that are outstanding, have any outstanding amount on them. That was the value of this particular one. That was the original exchange rate. That's the original base value. The actual rate at the minute actually is €2. So what we'll do is we'll just go into here, yeah, and we'll ask for euros, and we'll just change this to 1.2. Yeah, I don't remember a day actually when it was €2 to the pound, but hey, okay. So what I can see now is that it's changed, and the base value based on 1.2 to the pound is that. So we're actually going to make a gain, yeah, based on that, because it's a sale, yeah, of £63. What it does is it just does that across all of these transactions that have anything outstanding, and it comes up with a total at the bottom. So if you look at the gains and the losses, yeah, across them all, yeah, across all sales, yeah, we're gonna make £16.25, yeah, based on that revaluation. But if you look here, the dollar's quite got the wrong amount here. Yeah, so let's look at the dollar. Yeah, okay, US dollar we want. Okay, and I'll say 1.56, which I think is more accurate for today. Okay, so that's a bit better for us. Okay, so we're going to make money, foreign currency loss or gain. On the supplier side, yeah, obviously we're going to lose money, yeah, based on those exchange rates. Yeah, bank accounts, it revalues. So I've got two bank accounts here, one in US dollars and one in euros. The nominal balance is actually that. Yeah, so what it's going to do is at 1.2, yeah, it's suggesting the new balance is going to be that. So it's going to post that's an actual loss or gain on the bank accounts, whereas this is just a kind of provisional loss or gain on the customer and supplier codes. Because each of these transactions here never loses that original that base value exchange rate. So that base value never leaves that transaction. Yeah, we only take our loss or gains when we actually allocate transactions together. Yeah, that allows us to post part payments, post some payments, allocate payments, and don't allocate payments. Yeah, because if you've got a French customer with €100 on their account, yeah, and then you've got a receipt for €100, their account's zero. Yeah, but underneath, it might be that one was worth £50 and one worth £60. Yeah, so when you allocate them together, that's when it takes the loss or gain. Okay, so and then it proposes a set of journals, yeah, and you can post those if you want to, or you can just use this purely, yeah, to give you a kind of well, this is what I'm in for. Yeah, if the exchange rates change to this, what would happen? All that kind of stuff. So it's great, so. This is a way to post provisional loss or gains at your month end, and do what if scenarios if the exchange rate goes up or down. Okay, and obviously we save each one. so if you do actually revaluate and post it, so when the accountant comes along and says, well, why did you post, this to profit loss or gain, on the profit and loss, and why is this amount of money as a provision for loss or gain on the balance sheet? You can say, well, that's why, and you can just open this up, and these are the transactions, then that's the journal's why. Okay, stock revaluation. Okay, something else you might want to do at month end. Again, saves them as you do them, if you reconcile them. Here's all my items, and if it's an average cost item, it would go the quantity left in stock times the average price. If it's a standard cost item, it will go quantity left in stock times the standard cost. And if it's a FIFO item, obviously it'll look at the individual GRNs and transactions that are left, to actually give us a value. Okay, so the total value of all our stock equals 209,000. Our balance sheet stock control account equals 208. So what it's proposing is I do a journal to my stock control account and my cost of goods sold account to revalue, because the actual cost of my stock from this list is slightly different to my inventory control, and that will always be the case, because whenever you're selling stuff at average or standard, you'll always get some sort of differences between what the actual costs of all your goods were, to your the cost of goods sold posting that's been posted. Okay. Chart of account now. Okay, so this is a way for us to look at our trial balance. Okay, so this gives us obviously every nominal code. I'm looking at this month against the budget this month, but I'll just look at this month for the financial year to date, and our account group and subgroups and account types. I can group by any of these. I can look for a profit and loss code, for example. I can drill down on it. I can ask for a particular period, and then you can sort of have, right, what period, as of what period do I want to see the profit and loss or trial balance or whatever. So let's just kind of get rid of that for a second and go to our profit and loss layout. Okay, so the profit and loss layout and balance sheet layout could be whatever layout you like. Okay, just that this one's got like sales, purchases, direct expenses and overheads. And when I drill down on the sales, I've got some groupings here called Sales UK, Sales EU, Sales US. If I click on Sales UK, I can then see what other groups or nominal codes are in there, and I can see that 32,000 was for this month. Okay, the year to date's the same, so it must have all happened in this month. And if I double click on that nominal code, it gives me the more detail about the actual code itself. I can also specify budgets. I'll come back to that in a minute. But I can see the transaction history. So really good transaction history. In fact, I can see the journal code. I can see the period, the date, type, was it invoice or credit or whatever. The invoice number, the customer, and the description is very, very kind of it really means something. So I can see that obviously invoice number 238, customer 13, there's a 19-inch VGA monitor, one at £200. That's what we sold it at. So then obviously you can see that information. If I double click on the actual journal, it will give me the full journal it was part of. Okay, so I can see that 475 went to the debtors control. I can see that carriage and freight was £10. I can see the VAT on the carriage and freight was £1.58. I can see the VAT on the first item. The 1 gig of RAM was £31.50. And same on the other item line. And I can see that we sold them at £200, and sold them at £200. And then automatically the cost of goods sold for the 1 gig of RAM was £120. And the Super VGA monitor was £130. So that put that to the profit and loss, and obviously reduced the inventory controlled account by that. And I can see that these elements were VATable journals. Part of the journal, but that's a really good. That's one of the best journals I've ever seen from any system, because I'm not having to kind of go hunting around for information. I've really got everything here. I can even see what type of item it was, what the quantity was. And obviously I can drill down the actual invoice I wanted to from the nominal. And I could group this by anything, so I could say, well, let's group this by supplier or customer, and see and look at the transaction history. Okay, so then I can go back to my profit and loss, and then I can just say, oh, okay, what makes up this 4,300 then? And same sort of thing, I can look at the code, and again look at the transaction history. But coming back to the budget, if I go, let's say I want to set up a budget for this of minus £10,000, because obviously sales are minuses, the credits. I can pick a particular seasonal type split. So this one splits it by 40% there, 5% there, and then 10% on the end. Or I can ignore that, and I can copy budgets from another nominal, or I can say, okay, the start amount is on a budget about £1,000 per period, and I want to add £100 to it each time. So you can see that, or you can do the same thing and say £1,000, and I want to add 20% to it. And then you can see it does it by percentage rather than the actual amount. Okay, so that's a kind of profit and loss. Look down here, you've got overheads. You can say, oh, okay, what makes up that £1,000 wages? It's great for inquiring, and looking at it. And here you've got options of this month budget to this month against last year, this month financial year to date against the budget year to date, or budget year, the year to date against last year. So if I pick one, you can see the actual transactions. You can print this as well from here. You also have options for, if you use segments, like we described earlier, you could have one profit and loss layout, and then say, right, I only want to see this for the UK, and say OK, and then obviously the transactions will only pick up any segments with the UK in them. So you can see, so this is now a UK profit and loss, and if I wanted to go back here and just say, okay, give me them all again, then it will give you the lot. If I come out here and show you the actual financial layout while we're here, and I'll show you can create as many as you want. So if I want to create a new one, profit and loss, I'm going to call this profit and loss Tony. I'm going to copy my existing profit and loss. I'll copy that one, the default one. And so here it is. And I can amend and change it as I want. Good thing about our system is that you can have your profit and loss is totally amendable. You don't have to have category of codes or anything like that. You literally say, there's my sales UK, and you specify the codes that go into it. So it's as easy as that. You don't have to have ranges, or you don't have to think about your kind of structure or having the codes together, because I could pick another nominal code here for, I don't know, I could pick 4,400. Actually, I'll pick 4,905. There you go. So it doesn't have to be kind of next to each other in a range. I can do even more subgrouping. So like if I pick on Sales EU and actually make that a subgroup of Sales UK, we'll look at that in the profit loss in a minute when I look at it. Is it usually a credit or a debit? Okay, so obviously sales are usually credits. So, but if I sell it, it's usually a credit. Then it will show it as a positive number. And take it away obviously from the other stuff. This little thumbs up thing says, have you duplicated any accounts? Well, I have, because obviously I picked that twice, and it's in Sales Carriage as well as Sales UK now. Okay, so that's the one I just did, and there's that one we just created. Effectively, it's saying that you've not reported that one in the actual layout. I'll ignore that for the time being. So if I come out of here and I go back into Chart of Account and I pick on that one we've just done, what you can see is when I drill down on sales now, I've got Sales UK, but I've also got the codes, but I've also got that subgroup in there as well. Okay. The layout's totally amendable, totally changeable. I've not met anybody yet that can't be satisfied by that, and especially when you've got multiple layouts. So even if you didn't want to use the filter on segments, you could just have a layout for profit and loss UK, profit and loss Europe, profit and loss whatever, and design it based on picking the codes that you want to see in there. Okay. Batch posting is when you want the transactions to come into the nominal. So if I just say new, run through it. So everything up to November. That's the only stuff that's up to November. So I'll say OK. And then that will bring anything in for November. Okay, so anything past November, past our current period, is sitting in that holding tank, waiting to come in. Yeah, but obviously we can look at it, yeah, by clicking that include unposted button. Yeah, if I wanted to look at a profit and loss ahead of time or going backwards. Okay, process month end is very, very simple. Yeah, you literally have it tells you what periods are closed, what period I'm in. Yeah, so obviously if I run the month end, it'll take me into December. So I'm going to say close the period. Yeah, I'm going to close it for November. Say yes, and that's it, done. So if I go back into here, I can see that now my current period is December. While we're actually in here, yeah, in this account period in the setup, if you ever have to extend your year end or contract your year end, it's dead easy. Yeah, if I wanted to add a period, yeah, I can add a period. Yep, say yeah, and I'll call this April. Fine. I can put whatever date ranges in there. So if you run on 4 weekly rather than kind of monthly, no problem. Yeah, and what it does is, yeah, the reason we can do this is that any transaction now, yeah, that was dated April, yeah, 2014, yeah, if it was sitting in our holding tank, would get reperiodized to period 13, yeah, of this financial year. Yeah, so if I kind of then deleted it, yeah, and got rid of it, then obviously any transaction that was dated April 2014 would basically now be period 1 of financial year 9. You know, and I can get rid of a period. Yeah, so I can delete a period. There you go. So, you know, it's as easy as that. And I can change the date ranges. I can't change the date range or change anything about the current period, but everything ahead of it I can. Okay, so I'm just going to not save that. Okay, so what else we've got in here? We've got something called Audit Trail. This is just so you can actually look at all the actual transactions that have been posted by nominal code. So you've got a filter over here. Yeah, and this kind of filters. Okay, so I'm looking at December's transactions, but I could look at November's, or I could look at, you know, the all transactions. So let me just kind of change the grouping, put the description in here, so I can see for nominal code 1001. Here's all the transactions. Yeah, if I go down to here a bit more, if I got down here 4002, you know, there's a transaction. Just a way for me to actually see all the transactions by nominal code that have been happening for any particular period on screen. Obviously we've got reports to do exactly the same thing, but sometimes it's nice to see it on screen. Prior year adjustments. Okay, so you get to your year end, and you know, none of us have got our final year end accounts, but you know, some of us want to run our month end and move on. So this allows you to run your month end, run your year end. 6 months later, you might get a journal from the accountant to update your transactions, yeah, as of the year end. And what prior year adjustments does, yeah, it allows you to do that. Yeah, so it's as though you got the journal off the accountant as of the year end. Yeah, so I'm just going to put whatever in here. Yeah, if I pick balance sheet codes, yeah, oops. So I pick a balance sheet code. Yeah, I can see that the brought forward balance was 0. Okay, so when I type 100 in there, now the brought forward balance will be £100. Okay, so it's going to post a transaction to freehold property, yeah, as of the year end date, yeah, and the brought forward balance would now be £100. Yeah, on profit and loss codes, let's say like 5,000. If I put the other £100 there, profit and loss codes don't have brought forward balances, yeah, because they're not balance sheet codes. So what will happen is, if that £100 was actually in purchases when I did the year end, it would have got zeroed and put into retained profit and loss. So what that's going to do is going to put the transaction in. It's automatically going to reverse it out and put it into the retained profit and loss account. So it's like this journal was done, yeah, before I ran the actual year end. You know, absolutely fantastic. You know, it's what everyone needs. Yeah, so because everyone doesn't get their journal off their accountant or adjustments, yeah, probably to 3 to 6 months after the year end, yeah, and this allows you to come back and do them as though they were at the year end. Okay, we've also got something called close period journal. Okay, and the reason we list them here, hang on a second, prior year adjustment, Yeah, the reason they're listed there is because obviously that affects your reports and everything else. So that's why they're all listed here separately, yeah, from other journals, because those are journals that affect your figures, yeah, that you might have kind of drawn a line in the sand. That affects that line in the sand. Closed period journal, exactly the same thing. Allows you to do a journal in back into any period, yeah, within the current fiscal year, yeah. So but obviously again they're listed separately from normal journals because that affects your line in the sand, yeah. Retrospective reporting. Okay, so maybe I want to see a aged debtors list, yeah, as of April. Okay, well not April 2014, but let's say as of July last year. Yeah, so July, 5 months ago, whatever. Yeah, I can do that. I can print it off. Yeah, I can do the same with creditors, and I can say do the stock. I want a stock valuation, yeah, as of October. Yeah, so it gives me that. Okay, so I've got retrospective reporting. We've looked at accounting period. Yeah, default accounts are really, just things where, if I was doing a sales order, where do I want the kind of confirmed cost of goods sold to come from, the sales codes to come from, yeah. Same with the purchase orders, yeah. Where do I want the non-stock expense items to come from, yeah. Inventory, what's the inventory control account, just basic kind of default accounts. If you look in preferences, you can tell it to get the accounts from the default account, or on profit when you do the cost of goods sold, yeah, you can actually say get them from the defaults, or get them from the customer, or get them from the stock item, or get them from the group. So you can actually decide where to go and get the sales and cost of goods sold accounts from, yeah, depending on how you actually want to report. You can also split it by warehouse if you want, and you can also mark journals as read only, yeah, so you can't amend them, yeah. Okay. We've looked at most of these things here. The budget split table was the one we used in that example. Yeah, you can see that this is where I set up the actual percentages and save it. Yeah, and that's how, and then I can use it on multiple nominal codes. When I actually kind of looked at that particular code, for example, let's pick on one. Yeah, so that's where I actually pick the actual seasonal example. Yeah, if I wanted to use it. Yeah, and it splits it for me. Okay, reports. Yeah, okay, we've got lots of reports in here, but I guess the main one is nominal code, opening balance, transactions, yeah, and closing balance. You can pick a particular period or a particular nominal range if you want to, but I'll just print this off in its entirety, so you can get an idea of obviously what it looks like. Let's just pick on something that's got maybe on screen. So look. Okay, so it was quite a lot of transactions, that one. Just gonna get to a 4,000, something like that. 4,900. There you go. So here we've got 4,000. Sales type A. Yeah, the journal code, the period code, the date, the document date, customer name or supplier name and address, the details, how much it was, and then you can see at the bottom here somewhere totals, debits and credit and total balance. Yeah, okay, that one's nice because it's obviously a shorter code. It shows it all on the same screen. Okay. One other thing I'd like to show is the ability to take this information to Excel. Yeah. So our chart of accounts is very good. You can manipulate it. You can have financial layouts exactly as you want. But if we use something called Open Database Connectivity, yeah. So I'm going to go from Microsoft Query, Interprise Demo. Okay, so these are all the views in our system, all our tables. Yeah. Okay, so you can see I've got some for accounting here. If you look a bit further down, you've got things for. Okay, let's have a look. Okay, there's quite a lot of accounting. If you look, I've got things like banking, yeah, CRM, and customer, and all that kind of stuff. You'll be able to, obviously you can see it. So you pick your. I'm going to just pick this one here. Yeah, transaction list from the nominal. Yeah, I can group it and sort it and exclude and all that kind of stuff here. I'm just going to dump the data straight into Excel. So what this is every journal and every journal line that's been done on the system. Yeah, so like this one here is opening balance, that's the reference code, that's reference to, that was the customer or supplier, that's the entity type, that's the nominal code, that's the debit and credit, that's the journal description, that's the fiscal period, just fiscal period description, yeah, date range, all that kind of stuff. Okay, so the only thing I want to add here is a balance code. So I just insert a column, yeah, to the left, yeah, and just make this equals that, take away a credit, yeah, it gives me a balance. Okay, I'll just now, so I've got a complete list there now. Yeah, so what I'm going to do is I'm going to now, yeah, create a pivot table. Yeah, so I'll create as a new worksheet, and then I'm going to do things like I'm going to take the account description and stick that into row. Yeah, cool. Values, I'm going to, okay, well I should have renamed that from column 1 to balance, yeah, so I can actually understand what it is. I'm just going to check that is actually giving me a sum, not an average or a count. Okay, great. Column labels, okay, so let's look at, we could put date down here maybe, yeah, okay, well that's a bit long-winded. Let's do period code or period description. There you go. Okay, so let me just tidy this up a little bit with the formatting. Okay, so format cells to numbers, 2 decimal places. Okay, so what I've got here is I've got one spreadsheet which is a complete dump of all my journals. Okay, and then what I've got here is I'm just trying to create a pivot table of all the information. So these are the nominal codes. Nominal code descriptions. These are the periods across the top. Yeah, so I can see that I spent on electricity £100 in November. Yeah, and I could even get more detailed than that by putting in underneath it, let's say the supplier or entity name. Okay, so if I just kind of close these for the minute. Expand or close the entire lot. Okay, and then go down to something like electricity. Yeah, you can see, oh, that came from the UK supplier. That, yeah, okay, that £100. Yeah, have I got anything else that might be? Yeah, sales. Sales type A. Okay, here's my sales over the period, and I can see who they came from if I want to. Yeah, I think all I'm trying to do is just give you an idea that it's very, very flexible. Yeah, and the chart of account is very, very good. The layouts are very are limitless. But if you're a spreadsheet type person, and a lot of accounting people are spreadsheet type people, yeah, then here's the data. Yeah, you can do anything you want with it, and you could and obviously here I've just fumbled my way to kind of doing a list of nominal codes by period. And obviously if you know what you're doing in Excel, you can get a lot more technical than I just have here. Okay. So let's get rid of that. Okay, so that's about it really. We've got fine journals, the posted ones and the unposted ones. Obviously you can drill down on them to open them up. That is accounting. Thank you very much for watching. Bye.